Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the co-founder and CEO of Zego, Sten Saar. Great to see you again.
Thank you for having me. Hello, everyone.
All right, so look, before we get cracking, let's learn a little bit more about Zego. So, Sten, you're an insurance company and you offer what I think you describe as clever cover to drivers and couriers and the like. Tell us a little bit more.
Sure. In a very simple terms, we offer insurance for drivers, predominantly focused on Uber drivers, Deliveroo drivers, and courier drivers, etc. And we do it with telematics app, whereby we track how you drive and we price based on that. So we do that in the UK, predominantly Ireland, and also France, Netherlands, in Europe. That's the core and crux of our business.
And give us a sense of the scale of Zego in terms of customers, if you're allowed to share revenues and growth.
Yeah, so we at the moment do around 120,000 active customers, roughly, drivers on the road. We capture 3.6 million miles a day. That is 170 times around the earth. And so we capture a lot of data and a lot of customers across all of those geos.
And in terms of revenues or, profitability, if and when that comes?
Not yet profitable, but I think, well, we are currently targeting end of 2024. So it's nicely on track, like we set out this to be. So one thing that we've done a lot this year, we've worked super hard on making sure we write profitable insurance business, because quite frankly, if you don't do that, but you're growing fast, then it's the faster you grow writing insurance business, that's bad, the worse it is. So we have a healthy loss ratio. Most of our insurance are making money. So we're in a good place in that sense. And that's probably all I can share at this moment.
And I think you're 7 years old now, if I'm not mistaken, and I believe you may have been the first UK Insurtech to gain unicorn status. Given everything that's been going on out there, I'm sure you're not going to tell me precisely what you're valued at, but you're still a unicorn, are you?
Good question. We've not done any other price rounds since then, so we are, yes. Of course, I know that macro has changed a lot, so when we need to raise money, I'm sure there will be a new price set. Based on current plans, we probably don't have to raise. We're going to be able to do well with our own cash. So, yeah, those valuations are, it's interesting when you look at public markets. You have a company that kind of steadily grows and moves, nothing changes, but valuation does major up and down. So this is one of those things that on a kind of a 5-year horizon, it doesn't really matter what the value is. And maybe you are, maybe not. I don't really mind.
I guess that's not a focus, but I mean, in terms of growth, you mentioned a few of the countries you're in, UK, Ireland, Netherlands and the like. Any more plans in terms of geographies and perhaps products that you're looking to expand into?
Geos, not necessarily. Definitely products in the UK. We, a couple of months ago, entered a van insurance. We launched that in August. It's a large market, and we'll be launching a kind of a young driver and niche segments probably later next year as well. So these are large markets. Purely only staying in the UK, writing those lines of business, you can build a multi-billion-dollar business, quite frankly.
Okay, well, we look forward to seeing that happening. So look, we've heard now about Zego. Let's get to know Sten a little bit better. So, you're Estonian, I know that because we've met a number of times. What are the top 3 countries people mistakenly assume you're from?
Oh, good question. One is definitely Sweden, because it's Swedish name, Sten. The other one is actually Nordic countries. I get guessed as sometimes Denmark. And on a rare occasions, they're like, are you Estonian? So it does get guessed as well. I've had, I think one wild guess was Italy once. I was like, where does that come from? Can't see a correlation there. But yeah, mostly Scandinavian countries is a guess.
That must have freaked you out when someone guessed that your accent was Estonian. I guess maybe if they were in Estonian, then that would explain it. But I think from our last conversation, Sten, you told me you are old enough to remember the fall of the Iron Curtain and Estonia's independence, and you were kind of a part of that in a way, if I remember you telling me. Can you just tell, for those of the people watching who didn't listen to our podcast, how were you involved in Estonia's independence, and what impact did it have on you and your family?
Yes, so I was born 86, so I was like 4 years old, and there was a thing called like a Baltic human chain, effectively, where people all the way from Estonia through Latvia to Lithuania held hands, and I was part of that. So apparently, like, I held hands in that human Baltic chain. That was the kind of one of those moments of becoming or getting independent. And then since then, everything moved and rapidly changed. In the school I went to throughout the years and so forth. So the great thing with Estonia, people often ask me, like, why there are so many great startups coming out from Estonia? Why is Estonia so entrepreneurial? My belief is that it's only like 1.3, 1.5 million people, and it literally had nothing when it became independent. So you had to build everything from scratch. So you've got relatively small population. You don't have systems or infrastructure from 60s and 70s like banking or finance and all the other things. So building stuff from scratch with the latest technology. So you were able to very quickly build, and then because it's small enough population, it's a lot more straightforward to implement it in production effectively compared to changing a system for like a bank that serves like, I don't know, tens of millions of people across the country. So but the independence journey, it's been good. Like it's been great to see from scratch a build as a country.
Right, a kind of for want of a better phrase, another kind of startup nation, if you like, which I know is the moniker that Israel likes to go by.
Yes.
You, of course, also, I suppose, epitomise that starting from scratch and entrepreneurial zest, because this isn't your first startup. I seem to recall you having a big success and then kind of having a big fail. Can you tell us about that?
Yes. So Zego is my fourth business, the largest, the most successful so far. And but my first business was at the age of 17, back in high school, when I built a notepad business. Usual paper notepads, but inside the covers we would study aids. Took that to 4 different countries. At the age of 21, I had like $1 million revenue, EBITDA margins of 50%, highly profitable. And then I took all of that money and also asked my dad to give me take money out against his property as mortgage. I invested that into another project that effectively, imagine a Twitter, but on post-its, digital post-its on Twitter. And that's 6 months later, no money, no project, it just did not work. And that was a sense of moment of before that, as a young person as well, I thought whatever I touch turns into gold. And that was a clear coming to home moment. It's no, that's not how it works. And then after that,
your dad forgave you. Sorry, Sten.
Yes. After several years of payments, I still paid. For a good 10 years, I paid it. So it wasn't hey, we're writing it off. So it's yes. And then after that, what did happen though? I think a lot of mistakes, humbleness came, appreciation that there's a kind of a combination of hard work, luck, timing, so many other things that come in play when a business can or will be success. And that humbleness definitely has helped me to build Zego and kind of try and get through all of those challenges that get thrown at you every single day.
Very brief, is your dad a shareholder? Did he kind of,
No.
Did you go from being in debt to kind of, helping him out?
No, that was one of my clear rules, that no family relations in shareholdings, because it just makes relationships more complicated, and you want to have that line of separation. Otherwise, the Christmas dinners will be like a shareholder updates rather than actually, hey, how are you doing?
I suppose that would make for a fun shareholder update, but a less fun Christmas dinner. But okay, look, so Sten, a key part of this interview is to get your take on the future of finance. But first, We are going to take a very quick break, after which we're going to continue our conversation with Zego co-founder and CEO Sten Saar. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. And now, Sten, let's talk about the future of finance. So, Sten, the last time we spoke, I think, was during the pandemic, if I'm not mistaken, which would have been the perfect time for you and other startups to, be fundraising and the like, because we saw this massive boom in fintech especially. Talk to me about the prevailing conditions now for fintechs or insurtechs like yourself compared with then. Is it tangible, the kind of difference in mood and feeling and the way that fintechs are being formed or operating?
I mean, it's a stark difference, and I've done several diary entries or therapy sessions about that difference in my experience of the last couple of years. But 2021 was like raise money. I went to raise one amount, I raised double that significantly fast. And then I remember talking to shareholders and investors like, look, you need to completely think differently here. Like whatever helped you to get here won't help you here. And that was like a sheer crazy like growth focus. And then it's been completely the other way from like 2022 or like second part of 2022. It's like profitability above everything else. Nothing else matters. Then there was a bit of hope that, hey, maybe like things will get better 24. Well, things aren't looking to get better in that sense, where the fundraise would be kind of feasible or fundraise market in 2024. So, and in that sense, that was very clear to me earlier, Q2 this year. It's like, what? Enough of this fundraising game. Let's get to the place where we control our destiny 100% and we make do with our own funds. And that definitely like cleared my mind, crystallized the focus, and let's achieve that. Then you have an option to effectively go from there, but you go from a place of profitability rather than from a place of like existential questions as a company. So, but there's been a stark difference, like from investors, shareholders, bankers, yeah.
And financial markets, in terms of public financial markets, they seem to have perked up a little bit, certainly in certain areas. The same hasn't happened in terms of fintech valuations and the way that startups are coping right now. Are these still, are we still trundling along the bottom?
What I'm seeing is there is lots of activity like pre-seed, seed, A stage, not as active as it used to be. Also because there's a question like who's going to fund the next rounds for those companies, because at the moment growth investors, B+ are very inactive. And I think there's a lot of companies that really, like some businesses just do not have a business model behind them. And some do, but like it's difficult to understand from this muddiness which one does, which one does not. So there's almost like settlement. I believe is required with growth companies. There's like, okay, we truly have a like meaningful business here that has its legs, and now let's fuel that growth further, versus like actually there's no business in it, regardless of valuation, regardless of any investment. So and I think that sense, like growth investment is pretty quiet at the moment. And but it's good. It's like, I consider this as an autumn storm, you know, when the loose branches get kind of pushed off a tree, it cleans the tree, clears space for new branches. That's happening at the moment with startups and fintechs as well. The valuations will follow. Valuations are more like, you know, private and growth company valuations follow predominantly public markets as well. Public markets are dependent on interest rates and what are the government policies. So in that sense, I think we'll just have to, as long as you can kind of continue building your business, not burn crazy amount of money, you're building a great business that 5 years from now we look back that, oh, that was just a 2-year little kind of a adjustment stint.
Right. And you know, we also have seen IPO markets tentatively open a bit, at least in the US, where Arm Holdings, of course a British company, was among those going public in New York. And that specific example, I think, created a lot of angst here in the UK, and concerns about the city's appeal to tech companies especially. You're based in London. You obviously founded this company, I think, before Brexit, if I recall correctly. Mm-hmm. If you were going to start it up today, would you still choose London? And if and when you come to IPO, would London be the place that you would turn to first?
I think there is no single answer as a kind of based on geo. It comes down to what the business does as well. Insurance started in the UK. Lloyd's is massive. A lot of insurance is written from the UK. Large reinsurers are based in Germany, for example, and Switzerland. So in that sense, the question is what business you're building. I think building an insurance business makes a lot more sense to build from London and in Europe, but just purely based on those bases. But it also depends where your customers are. So our customers are in Europe and UK, and insurance those are the markets. So it's a kind of a natural geographical location. If my customers were in the US, and I'm, then it makes sense to be more based there. So in that sense, I would just make a call based on what business I'm building, where my customers are. And that's more reasonable choice, in my opinion.
Okay, so talk to me now about artificial intelligence, AI. What are the challenges and opportunities for Insurtechs in particular?
I mean, they are immense. So I would split it into a few categories. One is operational efficiency, and that is a no-brainer. Like from finance to customer service to anything that there is operational processes involved, like should be implemented there. I think as an insurance company, that does not make sense to like build stuff from scratch. It's like buy as much stuff as you can and implement as much stuff as you can. The other place is claims in insurance, and that's where you can be deploying a lot of AI, and we've got couple of things in production and several things in the pipeline for next year. And that is insurance specific. You've got proprietary data there, and that will significantly help to cover your cost of claims effectively, the more you use that. And thirdly is underwriting and pricing. That's the other area of like what data you pull in. Like we use telematics data, and once you've got the telematics data, there's another 7 data layers that we can overlay that gives us way more accurate understanding of the risk and then price accordingly. So those 2 areas, the claims and underwriting, are the areas that we as a company double down and where we're going to have an advantage in underwriting over our competitors. And the operational stuff is like given. That's almost like, previously paper was used to do your accounting books, and then the digital systems came, then that's a no-brainer. Like that just needs to happen, and there's as many great companies that are being built around to offer these services. But I'm a big believer. I think it's transformative. One of the very few moments that's, there's been lots of hypes, but this is one of those hypes that I think it's very transformative.
Okay, and briefly, if you can, we've seen big tech like Apple getting into bits of fintech like buy now, pay later, and WhatsApp launching WhatsApp Pay in some emerging markets. Are you worried at all that big tech might start looking at insurance, or is it just not worth the hassle from their perspective?
I'm not worried. Like, I'll give you an example. Tesla entered insurance a couple of years ago. Now, when you look at the insurance like performance, for every $1 that they sell insurance, it costs them $1.20. So they're losing money. The more they do, the more they lose. So it's not that straightforward to get your insurance right as a full stack. You can, yes, do distribution as like an MGA or as a broker. That for sure. I think, you know, there's this case to do so. But, you know, in the underwriting and claims, it's nitty gritty. You are like dealing with garages, you're dealing with fixing vehicles, you've got lead times of parts. It's messy, and their DNA is not dealing with that much hardware as such. So in that sense, I'm not worried, because like the way we do it and how deep we go in terms of underwriting, I think we have a strong winning chance against them. I would be more worried about some of the larger ones who just purely sell based on static factors, that the data that insurers have. The large tech companies.
Okay, so look, it's time now for our round of rapid fire questions. Are you ready?
Let's do it. No idea what's coming, but let's do it.
All right, so I've got 90 seconds on the clock. I did have 90 seconds, but it just went back to 2 minutes. I've got 90 seconds on the clock. When it runs out, then we will stop. So we'll try and get through as many as we can, and just one-word answers is all I'm looking for. So away we go. What fintech segment has the biggest potential over the next 5 years?
Insurtech.
What is the biggest pain point in your everyday financial life you'd like to see resolved?
Utilities.
Do you think we are at the beginning, middle or end of the fintech wave?
I think it's consolidation.
Do you think that regulators in the EU and US have adapted fast enough to keep pace with all the changes and possibilities in the financial space?
No.
How would you describe non-fungible tokens, NFTs? A scam, B, an interesting concept, or C, part of the future that we really don't want to miss out on?
I mean, creativity stint.
All right, not sure what the answer is there.
Well,
was A, B, or C?
Oh, sorry, that was A, B, C.
Interesting.
Option.
Yes.
Oh, sorry. Go on. Sorry, I missed it. Sorry, go on. Sorry, say again.
How would you describe NFTs? A scam, B, an interesting concept, or C, part of the future?
Interesting concept.
Have you personally ever invested in crypto?
Yes.
Are physical point of sales part of the future of finance?
I think so.
Out of 10, what are the chances that this is the only one we've got time for, so out of 10, what are the chances that one of the neobanks will be as profitable as a top-tier legacy bank within the next 10 years? Rate that out of 10. Is it 10 the most likely, 1 the least likely?
9.
Okay. Well, as you heard, that is all we have time for our round of rapid-fire questions, and I'm afraid all we have time for our conversation as a whole. So I really want to thank you, Zego co-founder and CEO Sten Saar, for joining me today. It's been great chatting with you once again.
Thank you for having me.
And for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter, or X, at Paris Fin Forum. That's all for now. See you next time. Bye-bye.